Hello traders, Gary Wagner here. Just before 11 o'clock in Honolulu, 5 o'clock in New York. It is January 23rd, Wednesday, 2019, and this is the Daily Report for Gold and Silver. Gold is trading lower on the day, currently down 80 cents at $1282.60. That is basis the February contract, high $1286, low on the day $1277.70. Now the rest of the metals complex is trading higher. Gold up about 4.5 cents at $1537. Platinum trading up about $5.40, and that is currently bid at $796.60. And palladium up about 0.25% at $1309. Now, that is all within the tailwinds of a slightly weaker U.S. dollar, down about 0.2% at 95.77. Now, the stock market is still open for about another 5 minutes, but as it stands, we do have solid gains in the market, with the Dow Jones Industrial Average trading up 161 points at 24,565, and the Standard & Poor's trading up about 3 points at 2636. So traders, very quiet but interesting day in the market, with U.S. equities trading higher, and it is showing a tendency to move back into a bullish mode. And in terms of the precious metals, all of them higher except for gold. Gold trading down about 80 cents on the day. What I find most interesting when we take a look at this market is what we spoke about in our opening letter, and that is the identification of a golden cross. That's right here. And this golden cross is what I believe to be the most significant of any of the golden crosses, because this is a point in time in which the short-term 50-day moving average has crossed above the longer-term 200-day moving average. And as you know, you can have a golden cross or a death cross from any different set of moving averages. Realize we use the 200-day moving average to determine whether a stock or commodity is in a defined long-term bullish trend. Above it and below it is a defined bearish trend. And the 50-day moving average is used when we are looking at a shorter-term trend on a daily chart. Now, we did get our first golden cross, and this was when the 50-day moved above the 100-day, and this came back at the end of November last year. And if you notice that right when they crossed, we had an acceleration of trend, but we moved solidly higher. And then when pricing crossed above the 200-day, we got another acceleration of the market, and that was up until it really hit a resistance point, which came in roughly at $1,300 per ounce, and that, of course, is still in play. We still have, I believe, solid support. Again, this is February, basis the area of $1,276 per ounce. That really was the low that we hit yesterday. So we are kind of caught within this range between the support level here at 75 and our resistance level, of course, which is sitting at 1,300. The fact of the matter is that because we had this cross today, it tells me that there is a greater likelihood that we will see the market continue to track higher and challenge this $1,300 mark rather than lower. Traders, which takes us to a look at April futures, because of course our next trade will be in the April contract. Now, given that we did break a couple of days ago to the downside with this compression triangle, that of course told us that we would probably see lower pricing. However, it seems as though, at least on a tentative basis, we have found some real support at about 1281. That is the 0.23% retracement mark, and we have seen a higher high and a higher low in today's trading, even though it is trading off by $1. Our resistance is going to be between $1,300 in the April and $1,305. So those are the numbers that we definitely want to look at. We are currently flat with no active trades, but I am looking to enter the market from the long side if we get more of a solid signal, and that technical golden cross today was certainly a strong signal. We haven't seen that occur yet within the April contract, but that's only days away if we continue to see higher pricing. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.